Everyone talks about once in a lifetime buying opportunities after they've already passed. But what if you could actually recognize the moment before it happens, before the bottom hits? In this video, I'm going to show you how to spot true value before the crowd catches on and why most investors miss their shot every single time, hoping that it causes you to think just a little bit right here. The best time to buy stocks isn't when everyone feels great. It's when everyone is freaking out. But remember, the idea of implementing it is a lot harder than the idea of saying it. Now, I know it all sounds weird, but it's absolutely true. When the news is full of panic, the stock market is dropping, your friends are saying, I'm just going to wait until things settle down. That's when the true smart money, the true smart investors will get interested. Does that mean they're picking the bottom? Absolutely not. That is still a virtual impossibility. So let's break this down like a story. Because once you understand the story of how real investors think, you'll hopefully never look at the market the same way ever again. Imagine walking into your favorite store, the stuff you love. I don't know what it is, games, shoes, snacks, purses, whatever it watches, all 20% off. Would you walk out? Absolutely not. You'd stock up, right? It's harder when the market's going up and a stock you love or own is going down. But here's the thing, guys. The key to all of this is you only buy when you have a clear understanding of what the stuff is really worth. When you have that margin of safety. When good companies go down in price, not because the business is broken, but because people are scared, you might be looking at a great buying opportunity. A lot of people will call this catching a falling knife. That sounds real dangerous. And it can be if you're actually catching a falling knife. But most of the people who say that are too caught up in the story and they're not paying attention to the fundamentals. The example I always give about Microsoft in 2011 when I thought it was great, and I had a tech CEO tell me that Microsoft was dead. And I'm like, if it's dead, how is revenue going up 7-8% a year and profit is going up 11% a year consistently? They only had 1 year in which revenue went down. That was during the great financial crisis. He was paying attention to the story of Microsoft price, not the fundamentals. It's only risky if you don't know what you're grabbing. And guess what? The third principle, the third tenet of our principle-driven investing is if you don't understand it, don't buy it. I'm not telling you to buy things just because the price is going down. If the price is going down and you understand it and the price is well below value, that's when you go grab it. Let everybody else think it's a falling knife. That's the point for you. If you know what something is worth and it drops in price, it's not scary, it's smart. In the great financial crisis, the same houses that were selling for $120,000 to $150,000, I was buying for $10,000.